For the trades that I bought today, I will go through them on this video so that you can understand why I bought them. Hi guys, it's Stock Curry, and despite the lower than normal volume due to the holidays, the market was up over 1% today. I'm going to let you know what is moving the market and what to watch out for tomorrow, as well as what I bought today. So let's get into it. Here's the stock market news that is moving the markets and what to watch out for tomorrow. The Biden administration has decided to extend the student loan payment pause until after June or when legal challenges resolve. Student loans were originally expected to resume payments in January. However, it is now a floating date on when those payments will resume. It could be as late as June or earlier than that, depending upon when the legal issues surrounding the student loan debt relief are resolved. You might recall how earlier this year, President Biden announced up to $10,000 in student loan relief or more for certain borrowers. However, that student debt relief so far has been ruled unconstitutional and illegal. So until this gets through the court system with all of the appeals, Biden has decided to pause student loan payments until this is resolved. Now, we don't know when exactly this will get resolved. We don't know when exactly student loan payments will resume, but it will be no later than June. Unless they get delayed again, of course. But generally speaking, we are looking to resume student loan payments after the legal issues surrounding the debt relief have been resolved. And unemployment continues to get worse, with HP now announcing that they will lay off 4,000 to 6,000 employees over the next 3 years. Now, any one company doing thousands of layoffs doesn't make a huge dent in the overall job market here in the United States, but if enough companies combined do layoffs, that will cumulatively cause the unemployment rate to start to rise. This is something that we need to watch for because it's one of the biggest things that is keeping the United States from going into a recession at this time. It's one of the main reasons why it still looks like a recession is a few months away. And last quarter, investors purchased 30% fewer homes as price increases have slowed down the rate at which investors are buying homes. That is the biggest drop in investor sales since the Great Recession in 2008. The drop in investor sales outpaced the drop in overall home sales, which were down roughly 27% in the third quarter. The investor share in the overall market also fell to 17.5% from 18.2% a year ago. What this shows is that while home owners are buying fewer homes, investors are buying fewer homes at an even faster pace. Now, home prices are still higher compared to a year ago, but the annual gains are shrinking at an unprecedented pace. The S&P CoreLogic Case-Shiller National Home Price Index was up 13% in August, which was the most recent reading, but that was down from 15.6% in July. The negative 2.6% difference between those two monthly rates of change is the largest deceleration in the history of the index. Home prices are dropping faster than they did in 2008. In fact, they're dropping at the fastest pace in history. So when people look at the upcoming recession and they try to compare it to 2008, and people say, well, it's not the same as 2008, I tell them, you're absolutely correct. It's not the same as 2008. It's worse. And the data in the home prices points to the fact that the upcoming 2023 recession will actually be worse than the 2008 Great Recession. In the short term, though, we have to keep our eye on the Fed to see what they're going to do as far as rate hikes over the next few months. And the FOMC minutes from November are going to be released on Wednesday. This is expected to be a pretty major market mover, but in what direction, we don't know. It will depend upon what those Fed meeting minutes say. Now, part of the problem is the Fed meeting minutes are going to come out towards the market close. The Fed meeting minutes are going to be released at 2 p.m. Eastern Time, or about 2 hours before the market closes. That's only going to give investors about 2 hours to react to these meeting minutes. And the meeting minutes can be quite long. So it will take time to go through them and read them and process them. And it will take time for the market to react to the meeting minutes. The full market move will not complete in the 2 hours remaining in trading on Wednesday. Now, Thursday, the market is closed due to a holiday here in the United States. And then on Friday, the markets close at 1 p.m. Eastern time, or about 3 hours earlier than normal. It's a half day on Friday. So the remainder of the market move from the FOMC meeting minutes should occur on Friday. Here's what I bought today. Throughout the day, I made almost $2,000 day trading, but I really want to focus on what I bought overnight because that's what's going to help you out. I bought the following call options for swing trades. I bought an Apple $155 December 16th call option. I bought a NASDAQ 100 $295 December 16th call option. And I bought a Tesla $185 December 16th call option. Now, these are very bullish plays. And if you want to know everything I buy and sell, I post most of my trades on Twitter. You can follow along on Twitter at twitter.com/realscottcurry. That's twitter.com/realscottcurry. But if you want to know why I am making these trades, you can join my We Profit Day and Night coaching program, where I explain why I'm buying and selling everything that I do buy and sell, so that you will have a better understanding about how I make trades and how I make money in a market like this, so that you can make money also. And currently, we are offering a 20% discount for Black Friday. If you want to take advantage of the 20% off, it is good through Monday, and you can schedule a call with an onboarding specialist to find out more at weprofitdayandnight.com. That's weprofitdayandnight.com. Now, for the trades that I bought today, I will go through them on this video so that you can understand why I bought them. Let's start with the Apple call options. If we look at the weekly chart on Apple and we look at the MACD, we can see that the MACD just had a golden cross on the weekly chart. This is a very bullish indicator, and that is why I bought call options on AAPL. Now, AAPL is also one of the largest stock weightings in both the S&P 500 as well as the NASDAQ, and that had a large reason why I also bought call options on QQQ, which is a NASDAQ 100 ETF, but I'll get into a little bit more of that later. Let me first talk about Tesla. On the daily chart on Tesla, we had a doji candle forming, more specifically a green doji candle. This is a bullish indicator and a technical indicator that points to a reversal pattern. Because of that reversal pattern, I decided to buy call options on TSLA. TSLA is also a pretty heavy weighting in the NASDAQ 100, which is another reason why I bought call options on QQQ. Now, QQQ has not shown any confirmation of bullishness yet outside of the 1 hour chart. However, you will notice how on the 4 hour chart, QQQ is very close to a MACD golden cross. Further, if QQQ does get this MACD golden cross, it will rise above this orange line at $286, which is very strong resistance on QQQ. And once it gets above $286, it should be able to rise higher from there. Now, my interest in QQQ was triggered due to some very large call options that were purchased on QQQ earlier today. Somebody bought over $500,000 worth of call options on QQQ earlier today. Specifically, those call options, the bulk of them were for the quarterly December 30th expiration date at $300 strike prices. Now, call options will sometimes be purchased by short sellers as a hedge against their short positions. in case their short positions go against them. They won't lose too much money. But normally, when a short seller buys call options, they're buying leaps call options. That is call options about a year out. And they do that so they don't have a large amount of theta decay or decline in the price of the option due to the time value going down. When a large amount of call options are bought with shorter term expiration dates, these are usually options traders buying these call options because they are bullish on the market. So this was a very strong bullish indicator by options traders. And that is what triggered my interest in QQQ. Taking a little bit closer look at that, combined with the bullish indicators on Apple and Tesla, I decided to also open up a bullish call option position on QQQ today. By the way, I wanted to let you know that I will be making buys in the Millionaire Club portfolio tomorrow on Wednesday, and I will try to get that video out on Wednesday as well. Make sure you follow me on Twitter because whatever I buy in the Millionaire Club portfolio, I will post it on Twitter right when I buy it. The video may not come out for a few hours after that, possibly not even until after the market is closed. So follow me on Twitter for the Millionaire Club buys. Again, that's twitter.com/realscottcurry, twitter.com/realscottcurry. I hope you got a lot out of this video. If you did, be a good friend and share this video with your friends and family so that they will know what's going on in the market as well. And make sure you hit the like button and subscribe so that you can get notified of all of my future videos. And if you want to know more about what's happening in the market, make sure you watch the last video that I uploaded here.